need some follow through here to confirm that yesterday's rally was not just a trick, it was a treat, right? So we need, it's kind of a trick or treat issue for the markets. So here's what you need to know before the bell. Yesterday we were talking about this, that the market was deeply oversold here. Very nice rally yesterday. Market was up a little over 1% yesterday. We'll see if we get some follow through. Now, this is going to be the important thing. This morning, futures on the S&P are up about 10 points. We need some follow through here to confirm that yesterday's rally was, not just a trick, it was a treat, right? So we need, it's kind of a trick or treat issue for the markets. Markets need to have a follow-through rally today, and that will suggest that this recent sell-off may be short-term over. The problem that the markets are going to have here over the next couple of weeks, and I would certainly expect a rally that would last a couple of days, maybe even a week, is that we're going to quickly run into resistance right here at the 200-day moving average, which we broke earlier last week. So again, that's going to be the first level of resistance. Market rallies back to about 42.30. That's also going to coincide with a 20-day moving average, which is going to intersect with that 200-day moving average as well. So there's a cluster of resistance that is building right at that level. If we can get back above the 200-day moving average, now that'll be bullish. That'll suggest your year-end rally is certainly intact. But again, unfortunately, that's going to line up and it's going to be impacted by the 50-day moving average, which is going to be around 42.50. So somewhere between here and 42.50 is likely the optimal trade at this moment for the markets. And so if we start to get back up to this 42.50 level, that's probably a good area to start reducing some risk, raising a bit of cash here. If you haven't liked this decline, right, this has been more impactful to your portfolio than you wanted, that's going to be a good level around 42.50, 42.60 to potentially reduce some risk in your portfolio. It's also going to be the top of this downtrend channel that we've been building in the markets over the course of the last couple of months. So again, work that process, work that channel for right now. If we break out of that channel to the upside, then, well, we've got higher prices ahead, and we'll have to make some adjustments at that point. But for right now, we seem to be really kind of confined to this particular channel in the markets. So pay attention to the risk. Again, there's some opportunity going into the year. Stock buybacks are really going to start in earnest next week. This week, we've got Apple. Basically, about 80% of the S&P 500 will have reported earnings by the end of this week. So we're going to have a really good handle on earnings. Stock buybacks open up in November. You typically get some buying in November and December. And again, that'll probably put us within this channel that we have currently. Now, once we get to January of next year, it's kind of a whole different game. So we'll figure out what happens to the markets when we get there. But for right now, pay attention to that and manage your risk accordingly. That's what you need to know before the bell this morning.